Dalal Street clocks gains for the week. In fact, it's the third week in a row. And this has happened for the first time in 5 months. The Sensex and the Nifty have gained nearly 4 percentage points. If you accumulate the gains over the last 3 weeks, this week, the frontline indices are up close to about 1 percentage point. Now, over the next 30 minutes on Editors Roundtable, we'll decode last week's action. We'll put the spotlight on Urban Company, what a stellar debut it's had. And we'll tell you why JPMorgan is betting big on India's CRDMO space. Hello and welcome to Editors Roundtable. I am Rima. With me is Ekta Prashant will be joining in. We've left that chair empty for him for now. And Hiren Ved, Director and CIO at Alchemy Capital, is here with us in the newsroom. Hi.
Hi, Rima. Hi, Hiren. Welcome to the show. Well, definitely some amount of a pullback is what we've seen this week. We've seen a little bit of the clouds being lifted when it comes to, maybe thawing of relations between US and India. We've seen a very good listing from Urban Company as well, and we've seen the Fed cut rates as well. So given all of that, what's your sense, Hiren? Do you think that maybe the end of the year we could probably see a rally for the Nifty as opposed to the consensus view of consolidation?
Well, I think the markets have been consolidating for almost a year now, right? We've negotiated a slowdown in the economy last year, then we negotiated a couple of wars, we've negotiated the whole, trade and tariff uncertainty. And I think we seem to be coming out of that. I think all the conciliatory remarks that we've seen over the last week or so makes people confident that the last irritant for the markets to kind of take off is also well in play now. And I think we shouldn't forget the fact that the big GST cut came as a significant surprise, upward surprise for the markets. And everybody's looking forward to a very constructive second half of the year, I must say.
So the opinion seems to be, Hiren, that, markets are due. We're poised for some sort of a recovery because last 13 months we haven't done anything. So we will get that bump up for all the reasons that you've said. But the question is, what happens thereafter? Can it be a durable recovery, or are you still
First, let's enjoy the recovery.
But do you think new highs are coming by Diwali? Or year end?
I think definitely by year end.
By year end.
By year end, for sure. Yeah, I think by then, hopefully, we should have hammered out some kind of a deal with the US as well. And everybody would be very keenly watching the auto sales numbers and, the updates that would probably come before the end of Q3. So I think there's a fair chance that we should be hitting new highs going into Christmas.
Oh, okay. New highs going into Christmas. There's going to be an event which is going to take place on Monday. The two-tier GST structure is going to come into effect this Monday itself. What's your sense in terms of what the festive season is going to look like for big ticket purchases such as autos, as well as the smaller ticket purchases in terms of consumption?
So I think given the fact that the GST was announced in August and then people kind of held back big ticket purchases like autos. I think we should see there is a considerable amount of hope and excitement that, the cut has been quite significant at the lower end of the higher ticket.
Hello?
Hi.
That's what we call making an entrance.
Thought I'll surprise you guys.
Yeah. Well, you did. But he just gave us the headline that he expects markets to hit new highs at least by Christmas.
Yeah, and we're discussing GST now.
Now he's talking about GST.
New highs by Christmas.
By Christmas.
But that new highs were 3-4% away, right?
It's not much.
I'm just keeping some cushion.
But not a 10-12% kind of a bump up. It will be...
I mean, it's difficult to say, but I think it's, one can't rule it out, right? Because, one could argue that last year valuations were high. Last year earnings growth was just single digit. But at least I think the second half of the year we should see earnings move into double digits, right? And then as we move into December, people will start discounting FY27. And then it looks like maybe a 10-15% move over the next few quarters should not be a very difficult ask.
I heard 10-12%. This is not now because markets have moved up very quickly last 3-4 days, right? I think 3-4 days back I heard by the end of the year, 10-12%, which basically gets us to 27,000 kind of levels.
Yeah.
And I don't know, I mean, possible. One person I was talking to, not on air, but off air, said that, well, I went to the City conference, Jeffries conference, which just finished, and a couple of others. He said, the classic signs amongst at least FIIs, foreign investors, of, meeting attendance is low, general apathy.
Yeah.
So his point was, this looks like a pretty classic contrarian kind of setup.
Correct.
For the market to do well.
Correct.
From here.
Correct. Because as I was telling them that, a lot of people, other than the retail investor who kept investing in mutual funds, I think a lot of people were sitting on the sidelines, given what was happening on the trade front. It almost felt like India was singled out. And I think whenever India has underperformed the other global markets by such a big margin, usually there is a reasonable catch-up that happens, right? So I think probability-wise, there's a pretty decent probability that we should see a very good move over the next few months at least.
Okay, well, let's get talking about one particular incident in the market, which was actually the bumper debut of Urban Company after it listed on the bourses at a 60% premium. Reema, you've been following this particular story from the start. You interviewed the promoters as well. So give us a sense in terms of the statistics and what the market is making of it.
Well, just first quick numbers. 103 was the issue price. On Friday, the stock closed at 185. Market cap has crossed 25,000 crore rupees for Urban Company. Last year, FY25, the company's top line was about 1,150 crore. But of course, it's been growing at 30%, and the management seems fairly confident that that rate should continue, and it is broken even. Now, what is the opportunity ahead? Well, they said the total addressable service market for them was $57 billion last year. They see it going up to $97 billion by 2030. That's nearly $100 billion of a size. They're planning to target 200 cities by FY30 versus 47 cities. But that is one growth area. In the current market that they're in, expand it to 200 cities, go deeper, go wider, etc. The second one is InstaHelp, which is, the quick made in 15-30 minutes you can get if your buy doesn't show up. That is a $10 billion opportunity. And the third one is Native, where they're manufacturing products, hardware products. And right now they only have two. One is smart locks and the other one is water purifiers, because they said in their experience, because they've been servicing the space for so long, the complaint was that people keep calling us for changing filters, right? Every 6 months you need to change a filter. But with this one, the Native brand, you don't need to change a filter for 2 years. But the sense you get from the management is that it's a very calibrated approach to expansion. They're not jumping in. They know it's a tough market to execute because you have so many service professionals. So we asked them that, is Native planning to expand into other categories, etc. He says, no, not as of now. We will eventually. But we want to make sure the losses come down. Very categorical that we will not let the losses of Native eat into the profits that we are making from the home service market, which they're acing, and they have pretty much a monopoly. So it seems a very calibrated, very grounded kind of a management, and they acknowledge the opportunity, and they're going to take it step by step. And it's a duopoly right now. So everyone seems to just look at the kind of reception it's got.
Yeah, I think. In either consumer products or a B2C kind of business or services, I think investors were looking for something that was growing. So, beyond the FMCG companies, which were finding it extremely difficult to grow beyond single digits or, even low single digit volume growth, I think some of these opportunities come as a breath of fresh air. And I think there is also a level of confidence the way Eternal and many of these stocks have scaled, right? And I think somewhere the investing community now feels that, yes, how do we play the consumer markets or the service or the B2C markets where things are growing much faster than the other available opportunities that were there. So I think...
But you didn't participate as anchor investors?
Well, we already have our plates full. With some of
tech companies that you own. Urban is not something that you own right now.
We have been owning Eternal for quite some time now. We also have some exposure to Paytm. We have some exposure to card trade. So we have a fair bit of exposure across what you call as platform companies.
So it's yesterday we were having this discussion on editor's playbook, and somebody asked, I think Sriram asked, how do you categorize? What are these companies? They're FMCG, they're this. So there's all kinds. I said, well, they're convenience, consumer, internet, right? So it's all about convenience, right? I mean, you want food at home, you want, as you said, buy at home. And of course, there's internet, there's a platform aspect, as I think Hiren said, and the consumer, which I think is very clear. But you said it's a duopoly, which is the other one.
No, I said it's a monopoly in this.
It's a monopoly.
It's a monopoly in this.
By the way, did you know there's a company?
Even I heard duopoly, but
Oh,
I was
sorry,
wondering
then
which
maybe,
other company.
Then I'm getting. I think
It's Friday Blues.
It's Friday.
But I think there's a company called, I'm told, Yes Madam.
Yes.
Yes.
Do you know?
I've seen it on Instagram. Come up a
Oh, is
couple
it?
of
Instagram,
times.
Apparently
yeah.
it's all women.
Huh.
Yeah.
And yeah, I mean, obviously it's much smaller, but it's there.
Yeah.
I was told.
Yeah, it's there. It's there, and it's advertising a lot.
So we spoke to Axel Partners, and they said that at the time that they invested in Urban Company, they had spoken to 20 other companies such as Urban Company, and they only chose Urban Company. So it's actually one out of many that eventually survive or reach the scale that you're talking about. So let's see what happens in the future.
Yeah, it's a tough business because you're dealing with so many,
Service professionals, as
service
they call
professionals.
Yeah.
It's only few people who know how to manage this can really scale.
And the biggest risk is that they'll give you the number and say, call me separately and I'll come and do the service.
Yeah,
so
I mean,
that's
all
the
of
biggest
those
risk,
happen.
which
But
is,
I guess over a period of time, if you are able to provide reliability of service, then people will stop taking these
The
shortcuts.
other route and...
it. The disintermediation, that's the word for it.
But in terms of when to buy, say, something like an urban company, it's not a commentary on urban company, but you take a look at Swiggy, right? Listed, did well for a while, had a sharp correction, right? Many people panicked for a while. Zomato is a classic example.
Correct.
Huge correction. I looked at PayP FinTech, 2021 listing, from 1100 fell to 400. And then, of course, it's had a one-way kind of move. So is there something to be said about when to buy these kind of companies, not chase the initial few days when everyone is chasing it, and then wait for that euphoria to be out?
Yeah, I think when these first few listed, which was in 21, etc., right? I mean, I think, first of all, there was a lot of euphoria about digital, and the internet, because we were just coming out of COVID, right? And the valuations were very high. Obviously, all these companies were losing money, and there was no real visibility when these companies would turn profitable. I think over a period of time, as each of these companies has focused on unit economics, on getting to EBITDA positive, I think the markets has more confidence that yes, some of this can work, right? And I think once that confidence came in, I think there was greater participation, across the board. And that's why I think Urban got such a fantastic debut on
So
on
it's
the market.
possible that some of the corrections we saw initially on all these other names, we don't see. Who knows?
Who knows?
I mean, because people have now seen that these eventually make money.
Correct.
So, why not just hang?
But again, I think
Aswan
we
had a
have
pre-
to be, I think one of the things about the internet businesses is also that it's very important to judge who's going to be the number one or the number two, because typically in these kind of businesses, it's the winner takes all, right? The number two or the number three really has, they don't get the share of market cap that the number one or the number two player gets. So I think the ability to assess that in the subcategories is extremely important. And that's why you see the differentiation in the valuation between, let's say, an Eternal and a Swiggy.
And a Swiggy.
Right? It's very significant.
$35 billion for Eternal and $11 billion now for Swiggy. So yeah, I mean, and of course the P multiples are very different.
Correct.
As well. Let's talk about the next one, right? JPMorgan is betting big on India, CRDMO space with Cohans and Divi's as their top bets. We, by the way, had the management of Cohans today with us, Ekta. We spoke with them.
Yes, absolutely. So I'll just give you a brief in terms of what JPMorgan is saying. CRDMO seems to be this big buzzword that we are working with in the pharmaceutical space. They've estimated that the Indian CRDMO market could grow around 13% CAGR to $15.4 billion by 2029. Outsourcing is a key driver, with global pharma increasing their reliance on CRDMOs. Now, India is emerging as a preferred outsourcing partner due to a couple of reasons over China, which is basically stronger regulatory compliance, IP protection, lower labor costs, and obviously the drivers are China +1, EU +1, and the US-China tensions, which are positioning India as a high growth contender. Now, JPMorgan has initiated with an overweight on Divi's and Cohan's. They have a target price of 7,800 on Divi's and 1,300 on Cohan's. And Divi's, according to them, stands out for the organically built scale, strong process chemistry. And for Cohan's, they're betting on the ADC market, which is basically the anti-drug conjugate market, particular cancer therapy. We did have Cohan's on the channel as well earlier in the morning, Hiren, and they're committed to that 2030 guidance of $1 billion. They're saying that RFPs have increased significantly in the past couple of weeks itself. They've received multiple RFPs. So there seems to be this big market, which is not also, and that those RFPs are for the non-ADC market, whereas ADC is also a separate engine of growth for them.
Yes.
So give us a sense, because you look at CDMOs, which ones do you like? Why do you like them? What's the growth opportunity there?
Well, the two that you mentioned are both that we own. Divi's is a bigger position for us, but we also have an investment in Cohan's as well. It's a large market, and I think Divi's by far has executed absolutely phenomenally, right? So while there's been a lot of excitement about CDMO now, but CDMO is not a new opportunity. I think Divi's, and before that Syngene, which was also one of our portfolio companies at a point in time, we saw that opportunity quite early, and I think it makes a lot of sense. I also believe that given the to and fro on generics, right, in terms of tariffs and so on and so forth, I think investors have preferred to invest in CDMO, which doesn't have those risks of tariffs, etc. And also it's a long-term structural growth story. Margins are good, return on capital is very good, and entry barriers are significant, right? So I think this could turn out to be, I would say, the next IT services kind of opportunity from India.
Hiren, expand the universe a little bit, not asking you for this or that, but what else are you interested in? Have you bought recently, last couple of months?
Well, actually, we haven't changed much of our portfolios, if you ask me, and I think for the longest time we've been bullish on 3-4 big areas. Our largest exposure is to consumer discretionary, and then some of these platforms included in that. So anything that is premiumizing, we think that there is a big opportunity there. We continue to have fairly large exposure on industrials and capital goods across power, defense, and all of these areas. We still feel we are quite bullish on that. We also have some exposure to premium real estate, which you could count as consumer discretionary. Given the amount of wealth that is being created in this country, I think every promoter who's selling shares is then going and buying flats in Camellia or wherever. But we think that longer term, we think real estate is underrepresented in India's capital markets. So we see that. Another area that we are bullish is the sort of capital market plays, asset managers, wealth managers, exchanges. We have a pretty decent exposure there. And then we have exposure to healthcare across hospitals and some of these CDMO plays. And then in tech, we have some very specialized players, more in the ER&D space, not the larger cap companies.
A company like NetWeb, have you looked at it, Hiren?
We own it, yeah.
Oh, you own it?
Yeah,
Wow.
we bought it immediately after listing. So we're still owning it.
So it's how many bagger
It's been a 6-bagger now.
so far?
Oh, wow.
Yeah.
What else in specialized tech?
So again, I mean, we own KPIT.
KPIT.
We own Latent View. We own NetWeb.
For our viewers, because there's not that much coverage, I think IIFL covers NetWeb. Just very simply, if you can briefly tell us the...
Yeah, so I think for us, what we found interesting was that high performance computing, cloud computing, AI, I think all of this is going to drive demand for localized built hardware and software systems. And I think NetWeb was the only company. When it got listed, we were quite amused that out of the top 250 supercomputers around the world, 50 were built in India. And many of them were built by NetWeb, right? And we realized that, anything which has to be high-tech, whether it is semiconductors, whether it is AI, every country wants to build domestic capabilities. And we thought this was a great segue.
So they don't build the chips because there's some connection with NVIDIA
No, they
as well.
build the boxes,
okay.
they build the servers,
Okay.
And they build the software that is built onto the servers, right?
And I think they have a supply line with NVIDIA for chips. So that's the other one, right?
Yes.
Which is also, because those chips are hard to get. And I think they have an agreement.
Yeah, I
some sort.
think anybody who builds high performance computers will need those chips, right? And when the IPO happened, many of these big IT service companies used to buy, the cloud computing hardware from them, right? Which gave a lot of credibility, because if Infosys is buying from them, then you know that.
And where is it now placed in terms of valuations and growth rates?
Well, it's been growing at 25-30% a year. And this was before the whole AI opportunity opened up. And now with the AI mission opening up, and I think more of compute and data center capacity will come up in India, my sense is that it will continue to grow at 25-30% a year for the next few years.
And where does it trade in terms of what are you paying for it?
I think it's now upwards of 50 times. Anything that is growing is not cheap.
What about latent view analytics? We don't often talk about it, but that's a quasi-consulting play, right?
So I think Latent is quite interesting. It's actually a data analytics company, right? And everybody talks about AI, but once, and what we generally talk about is AGI, which is the large language models. But I think once you start using AI in enterprises, then you need to have specific applications which may be relevant. So let's say a bank would use AI differently, a consumer business will use AI differently. But before you can start using AI, you need to get your data and your data sets in place. So I think what a company like Latent View does is they help an enterprise to make sense out of that data, so that then you can have a specific LLM which you can train on that data set and then start using AI in several of the functions within an organization. So that's actually like a step before you start using AI in your organization. So so we thought that there are no direct AI plays in India. There is very little, but we thought that Latent View could be a very interesting way of playing the AI trend globally. And if you look at it, they have all the Fortune 500 companies as their customers, right?
Okay.
There's a company called, I discovered it about a month ago, unlisted of course, called Cursor. It's 18 months old, $10 billion valuation. And what they do is, they're like a layer between you as a coder and ChatGPT.
Oh.
So you got a code, and ChatGPT will help you code, but how do you use it in your organization for your specific needs of coding? So it sits on top of, as a layer between you and ChatGPT. It uses ChatGPT, that's the engine. But they just provide a way for you to be able to use it in a more efficient way for your specific situation.
It's so interesting that this entire conversation for the last 30 minutes, majority has been in the new economy and nothing in the old economy, autos, infrastructure, cement, everything.
Pharma's universal.
Yeah, pharma, CRDMO, that's the new segment that we're talking about.
I think you will see the revenge of the old economy coming back now. With the GST
Hiren,
cuts.
it's been a pleasure. Thanks
Thank you
very
so
much for joining
But
in.
I must say, I spoke a lot of individual names. So as a matter of disclosure, we have interest, and we have our clients have investments through our PMS and AIF scheme in all these companies.
Absolutely.
So.
All right.
Thank you so much.
I think we have the disclosure up on the screen
Yeah.
now. So the producers just pulled that up. So absolutely, all good.
Yeah.
Thanks very much.
Thank
Hiren,
you.
for
Thank you so
joining
much.
us.
Thanks.
Well, I think it's a wrap on this edition of the Editors Roundtable. From all of us here, it's goodbye. Thanks very much for watching. More comes up on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty gained for the third straight week despite a lackluster Friday. All sectoral indices in the green, barring FMCG. Rupee remains above the 88 mark against the dollar. Centre seen relaxing its position on granting relief to cash-strapped Vodafone Idea, tells the Supreme Court that it does not oppose the telecom company's plea seeking relief on AGR dues. Des says some solution may be required, claims facts have changed on the ground. The government owns 49% stake in Vodafone Idea.
It's not only solar and wind hybrid projects that we are implementing. We propose to get into module and cell manufacturing.
RPSG Group Chairman Sanjeev Goenka commits to a capital expenditure of 1 lakh crore rupees in the next 5 years, tells CNBC TV18 that their first gigawatt of cell module capacity will be going on stream in 45 days, says they're looking at releasing their first AI-generated film in 12 months. US government targets Iran's Chabahar port, which is being developed by India, revokes the waiver on sanctions granted in 2018. This is a setback for India as the port is crucial to access Central Asia and Afghanistan. Chabahar port is also close to the Gwadar port in Pakistan, developed by China. Donald Trump and Xi Jinping are scheduled to speak today as Washington and Beijing try to finalize a deal to keep TikTok operating in the United States. The talks could be a precursor to a potential in-person meeting later this year. This would be the second call between the two leaders since Trump returned to the White House in January for a second presidency. US President Trump threatens to cancel the licenses of TV stations that criticize him. This comes after pressure from the administration led to ABC suspending late-night host Jimmy Kimmel for making some remarks about the murder of conservative influencer Charlie Kirk. Israeli military mobilizes more troops as it continues the ground assault on the densely populated Gaza city. The death toll in Gaza has crossed 65,000. United States blocks a UN ceasefire resolution for the sixth time. The truce call was approved by 14 out of 15 member states, barring the US. And Apple's new iPhone 17 goes on sale. Thousands throng Apple stores across the world. A scuffle breaks out at the Mumbai Apple store. The starting price of the phone in India is 83,000 rupees. All right, let's start with the day's market action. Sensex and Nifty gained over 1% this week despite a lackluster Friday. Both indices lost less than 0.5% today. In the last 3 weeks, Sensex and Nifty have gained 4%. All sectoral indices, barring FMCG, gained this week. In the money market, the rupee gained some strength against the dollar but remains above the 88 mark. 10-year bond yields softened in trade today. And several listed entities of the Adani Group surged in intraday trading session today. This after market regulator SEBI gave a clean chit to the group on some allegations by US-based short seller Hindenburg Research. The group added nearly 70,000 crore rupees in market capitalization, taking its overall valuation to around 14 lakh crore. The SEBI order details that it found no violation of laws, fraudulent practices, market manipulation, or insider trading. In a post on X, chairman of the group, Gautam Adani, said, and I quote, SEBI has reaffirmed what the group has always maintained, that the Hindenburg claims were baseless, end of quote. And the big story we are tracking this evening, shares of Vodafone Idea surged after the government relaxed its position on granting relief to the cash-strapped telecom player. The government has told the Supreme Court that it does not oppose the telecom company's plea seeking relief on AGR dues. Remember, the government owns 49% stake in Vodafone Idea. Ashmit Kumar is here with more details on this hearing. Ashmit, what are you picking up?
Well, major relief coming in for telecom player Vodafone Idea. The government batting squarely in defense of Vodafone Idea, asking for support for indulgence of the Supreme Court to bring about some form of solution to this Vodafone crisis. This is the first time that the government is openly rooting for Vodafone Idea, citing its own status as an equity shareholder in the company to as high as 49%. Now, this is not the first time that Vodafone Idea has filed a petition seeking relief as far as AGR issue is concerned. What is different, however, is the stance of the government. Previously, the best that Vodafone Idea got, like in the month of May, is the DoT, is the government being neutral, neither batting for or against any such relief, leaving the matter to the wisdom of the court. And as we've seen previously, the court had rejected previous such applications. Now, however, for the very first time, the government is squarely batting for relief, saying that they are equity shareholders. The facts on the ground have changed, that the situation demands some kind of solution, some kind of intervention, that the government is willing to work on some form of solution to address this issue of Vodafone Idea. The concern, of course, being that Vodafone Idea, as a part of its petition, saying that if this relief is not granted, it will threaten the existence, the company will go under. So clearly, relief being asked for by centre in favour of Vodafone Idea. The Supreme Court, for now, willing to hear the DoT, willing to Vodafone Idea further. The hearing, we understand, will resume next week on Friday.
Right, thank you, Ashmit, for that update. And sticking with court hearings, the Supreme Court judge has recused himself from hearing a PIL against Vedanta, Hindustan Zinc and Vedanta Resources over alleged financial irregularities and regulatory violations. The petition cites a report by US-based financial research group Viceroy Research. The report alleges that the companies are draining listed entity Vedanta via disproportionately large dividends and artificial brand fees. The case is now expected to be listed before a fresh bench in the Supreme Court for further hearing. The big news maker this evening, RPSG Group Chairman Sanjeev Goenka has said that the conglomerate plans to venture into cell and module manufacturing, and the first gigawatt of capacity will be going on stream in 45 days. In an exclusive conversation with the CNBC TV 18, Goenka said the company will also look at the export opportunities of these cells and modules as they offer a good business model. He also exuded confidence about achieving a market cap of 2 lakh crore rupees and committed a capex expenditure of nearly 1 lakh crore rupees in the next 5 years. Speaking on the future revenue streams for the group's entertainment subsidiary Saregama, Goenka said that the conglomerate will ride the artificial intelligence wave by venturing into AI-generated video content. He said that Saregama will hopefully launch its first AI-generated film in 12 months.
For the next 5 years, what we are committing to is a total capex of about 1 lakh crores, largely in the energy area. It'll